Welcome to our daily Forex range bar chart market analysis. My name is Derek Schimming, and this review is for Tuesday, April the 9th. Now we'll jump right into the currency strength view, disassembling the pairs, and you will see that again we're dealing with some above average yen volatility. Now we've had movement in the yen pairs both up and down today, and you can see, looking at the yen here on this view in light blue, you can see how the yen from rollover started moving down initially, but as we moved towards the London time frame, the yen was definitely on an upswing. This is at the tail end of the Tokyo market session and right into the start of the London market time frame. Then it goes very sideways and we see it start to drop down, leading towards the New York time frame, and now we've bottomed out and seem to have kicked up back up to the upside late in the afternoon today. Now if I remove all the currencies except, let's isolate the dollar and the yen, and then the pound and the euro, and in this case the Aussie. Yesterday we talked about that. We'll look at it again today, that the Aussie has been one of the more consistent movers to the upside, opposing the yen when we've seen it decline. Now again, I don't think this volatility in the yen, at least I hope this volatility in the yen does not dissipate anytime soon. And for the short term, or the foreseeable future at least, maybe if that's even on the short term, the yen definitely would be under some significant pressure to the downside. And I think that overall, we did this yesterday, haven't taken the trade today, but tried to expose ourselves to putting on long trades and looking in the yen pairs and looking to leave a portion of that trade behind as a potential swing or position trade, knowing that any of the yen pairs are likely to move in a substantial range in a fairly short period of time under the right conditions. So you can see that there has been a tremendous amount of yen volatility, and then look to the upside from the London open. Here's 6:59 GMT, so right in this range is the open, and you can see from the open the pound in pink was moving to the upside and has actually maintained strength through the day. The euro was very slow to get going here in red, but you can see as we got into the New York time frame, right about just in front of the New York open, you can see how the euro started gaining momentum to the upside. And then again, even prior to the London markets opening, you can see, or right at the London markets opening, you can see how the Aussie has been moving here in orange, very, very consistent to the upside. I would have to say that again today, the Aussie yen has been one of the more tradable pairs in the marketplace. Look at the divergence also between those three currencies and the dollar. The dollar has actually been moving very steadily to the downside today, in keeping with the overall direction of the yen, and also putting out a lot more possibilities with your euro dollar, pound dollar, and Aussie dollar as far as long trading situations today. Let's look at some of these a little bit more specifically. I'm going over to let's look at that Aussie yen first. Let's put some attention, pay some attention to that pair, which I think is understandable. And let me bring up Aussie yen. Here in the top left hand corner on a 20 pip view. Now remember, our charts are disassembling the rapid price movements and reassembling the slower price movements, so my charts are giving you a very clean and clear display. So we don't have any elongated candles, we don't have any thin lifeless sections. We have a very consistent display through the range. Taking you back to last week, you can see the tail end of last week, the double bottom that happened at the start of all this yen volatility. Here we come into Thursday and Friday, extreme volatility in the marketplace, and then look how the power to the upside has continued this week. Overall, we've had some nice pullbacks in the run. Hasn't really brought, this is looking at a 20 pip view, it's not really letting it come back in the zone, but you can see the zone configuration has been very consistent. Look at the staring of the pivot point. Pivot here, ratchets up, pair stays over the pivot all day, ratchets up because of the upward bias, stays above the pivot all day, the pivot ratchets up, stays above the pivot all day, the pivot has again ratcheted up at rollover going into Wednesday. Looking at the euro yen, you'll see, and that's the Aussie yen, that's a very consistent view, a very clean view in that pair, if you will. if we look at you can see the pound here at the bottom right has been very sideways. The pound, remember, we're looking at a pound on that CCYX view that has been much more sideways, had its initial movement, but overall it's been moving fairly sideways these last 2 days and not doing what the euro had the greatest aversions to the yen yesterday. I think you would have to say the euro and the Aussie again have the greatest aversions to the yen again today. Here is taking you back on the euro yen to last week. You can see that same bottoming pattern. You can see the same extreme volatility on Thursday and Friday, and then we get into this week. You look at the move on Friday after non-farm, that volatility move on the Bank of Japan's actions on Thursday, and then look how we've carried this going into both Monday and Tuesday of this week. We keep looking toppy, and that's what I said yesterday. It still looks, we're in uncharted territory. We're way up in this level. As long as we're staying above that 128 mark, I think that's substantial. Now we're to 129s. We've moved up to the 130 range 2 times since rollover. In this range here, your highest move was right in this range, 129.93, and then just a short time ago before rollover, we got to 130.09. Now both times it's fallen back, but it is approaching and pushing against that 130 mark. We're in uncharted territory. So that's why my insistence is if you can get in a position where you are long a yen pair, you can taper out of some portion of that trade. We would call it punching out of the trade and taking a third or a half or 2/3 or 3/4 or even 80 or 90% of that trade off and leaving something in where you have a protective stop that would be at a break even or some type of profitable range. Then the potential to participate in one of these moves like we did yesterday, and maybe that will happen again today. I think the bias is that way. So exposing yourself to that opportunity, capturing a swing trade that could be even with a 10 or 20% portion of the trade, may be more than your other trades combined on the day, is a unique situation that we're dealing with. So you can see how the zone has stayed in force. We've had a very consistent, stable buying zone configuration here on the charts. We are again seeing the pivot ratchet up, pair stay above the pivot. It ratcheted up starting the week. The pair stayed well above the pivot all yesterday. It ratcheted up. It's used the pivot as some support today at the initial stages in before the London time frame, and the pivot is again ratcheting up. Will it stay above that pivot level? That almost forces it over 130. And or at least very, very close to pushing the door at 130. It's going to get squeezed in there, and based on the average daily trading range of the euro yen, it's hard to believe it'll stay above the pivot and below 130. I think that's almost impossible to assume. And so which way is this thing going to go? Again, from a fundamental standpoint, one would argue that the yen really has to go down, but it doesn't have to do anything, although that would be the bias. That would be my suggestion. The 128 mark again becomes critical. Staying above 129 and breaking 130 becomes our trading opportunities right here, and that's not what you need. That's exactly what you need to be looking for. We've also had some consistency in the dollar pairs today. In light of the time frame, I won't review each one of those, but you can look at your charts and you can see that. You know that the euro yen and even the Aussie yen, looking at something, some of you want to maybe avoid some of this more extreme volatility, and so something like the Aussie dollar may be a very suitable alternative for you and allow you to participate in two of the currencies that are moving very, very well in this market, but a little bit off beaten path, not quite the same volatility opportunity. A little bit less volatility means a little bit more return potential, but still a good solid opportunity in the pair. And if we look at something like the Aussie dollar here on the screen, if I isolate this and go back just to the last couple of days as opposed to going back in the first a couple of months, you can see that the last couple of days and here, this tail end of April, you can see that it has had a more positive day, at least these last 2 days. This is still looking at a too broad a view. Let me scoot it back just a little bit more. Let's go all the way down to a 10 pip to see the detail there. But it's really these last 2 days over here. Remember, each one of these pivot points are adjusting on rollover. They're not consistent on the length of time because there's no time element here. We're looking at the price. A more volatile day is going to have more bars, hence a longer period of time that it covers. It's still the same 24-hour period. There's just more bars in that 24-hour period, and so on and so forth. And we've had more volatile days, but look at the Aussie dollar and its movement to the upside so far this week, especially today. Very consistent today. That's that dollar that I showed you on the RBCYX has been very consistent, moving to the downside. Look, if you want to do this in real time, you want to be with us, you want to check out how we approach the market and see if it's a fit for you firsthand, we invite you to do so. Just email us for any additional information or to schedule your free trial at info@fxrbc.com. It's on this video. Just send us an email, click on the website, you can put into the contact page. We'll send out a questionnaire, get you set up to come into the guest sessions, and we look forward to working with you firsthand and exposing you exactly what we do. And I keep saying, you're not going to make money watching these videos. You're not going to get trade alerts on Twitter that are going to make you money. As a trader, if you're serious about this, you've got to learn how to trade. You need to use these opportunities in the Facebooks and the YouTubes and the Twitters of this world to find some people whose styles and thought processes equal yours or make rational sense to you or fit your style and your risk tolerances, and then go investigate those people further. Do your due diligence on who they are and what they provide, and experience what they do to see if you can find a fit to help elevate your game, help raise your knowledge, provide you some education, and then support your behavior long term in helping you become a more well-rounded, more profitable, more consistent trader. We're willing to expose you to our style. We know what we do works overall. We want to show it to you firsthand, and so we give you that invitation. So send it in to info@fxrbc.com. I am Derek Schimming with ForexRangeBarCharts.com. As always, you have a great and profitable day trading. See you tomorrow.